Hello friends, the month of April turned out to be yet another good month for equity investors in India. The Nifty went up by 1.4%. However, the optimism on the mid and small caps was much higher and the returns there were much larger. From the international perspective, things have been quite stable and quite positive. The much awaited preliminary French elections turned out to be in line with expectations, and that also created optimism as far as the global markets are concerned. By the time this communication comes to you, hopefully the elections of the president in France would also be behind us on expected lines, and that should also allay any fears which investors might have from the Eurozone. In terms of the global outlook, I think things are stable in the US, things are stable pretty much in Japan and China, and there is a renewed flow of assets coming into equity as well as fixed income. Coming back to India, the RBI did disappoint a little bit with its hawkish stand on the policy. However, rupee continued to be quite stable, and that meant that the view on India continued to be quite positive. Though FIs were slightly negative in their flows and their allocation to Indian equity markets, the domestics led by mutual funds were big buyers to the tune of almost $1.5 billion in the month of April. And that led to a good interest, specifically in the mid and small cap side. On the monsoon front, things were pretty good. The forecast is for a normal monsoon of almost 95% to 105% of long-term average, and that also led to enhanced expectations of a rise in GDP. We are all awaiting the launch of the final terms as far as the GST is concerned, and that should lead India to another faster growth trajectory. In terms of earnings, the first bit of earnings have started to come in. IT company results were in line with expectations with no positive or negative surprise. The first batch of financial services earnings have been taken quite positively, with earnings being either in line with expectations or slightly better. We do await the earnings season to pan out in the month of May and June, and that should be the next sort of a trigger for the markets both on the upside as well as the downside. In terms of valuations, the market do seem to trend slightly higher than the long-term average. However, on the future side, the growth expectations are pretty modest. And if the monsoons, the expectation of which is a normal monsoon, pan out the way they are expected to, and with further reforms in terms of GST and more efficiency, earnings can spring a positive surprise for FY18 and 19. And that maybe explains that even at these slightly higher valuation, things from an investor perspective still merit investment. From Reliance Mutual Fund perspective, we continue to be optimistic and we continue to bet on the sectors, predominantly infra led by cement, select financials more on the corporate side. We have over the past increased our weightage to the PSU banks for the first time over the last 3-4 years. And on the consumer discretionary side, both urban and rural plays, we continue to be quite optimistic. All in all, we remain constructive, and despite an expectations of a small correction in the equity markets, we would advise our investors to stay invested and use all dips for further investment. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.